Hello, everyone, and welcome to the Suzanne and Sarah YouTube channel. I'm Suzanne.
And I'm Sarah.
And today we are going to talk to you about owner carry financing, and we're going to share with you everything you need to know about this creative financing tactic. So as I said, I'm Suzanne Moore. I'm a realtor here in beautiful sunny Bend, Oregon with Realty One Group Discovery, and I'm the founder of the Central Oregon Investor Network, which brings together investors not only from Central Oregon, but from all over the country to share resources, to connect with one another, and to create more passive income from real estate investments.
And I'm Sarah Willis. Suzanne and I are a team here at Realty One Group Discovery, and our primary jobs is to help people buy and sell real estate here in Central Oregon. We make these videos every week, both on investor topics for new and seasoned investors alike, as well as just then lifestyle topics. Today, we're bringing you an interesting one that we hope you learn a lot from. We've got a QR code here up on the screen. Please screenshot it or hold your phone up now. We also put together a really wonderful list of Ben's best deals in lots of different categories, including owner carry financing deals. And basically, if you are looking for a home of any kind in Central Oregon and you're not getting this email, you are missing out. Also, before this video is over, please like and subscribe to our channel.
Nailed it.
Okay, yeah, it's all right. We'll get it as we go. So let me just think about this for a minute because I feel like I didn't want to do, well, it doesn't really matter. I actually figured it out. So intro, and then we move into, it doesn't matter. All right, why don't you just start the intro and we'll just go from there. Well, we've got this, we'll wing it.
Okay, I just want to make sure.
Oh, yeah.
Where do I stop?
So
I'm stopping after owner carry, and then wait, what am I saying?
So hold on.
Oh, I got it. I think I can figure this out.
Okay.
All right, you have heard about creative financing and you want to know more, especially with today's interest rates. So let's break down one form of creative financing, which is owner carry financing. Do you want me to do this too?
No, I got it. Okay. So just real quick up front, these are things that you need to know about owner carry financing. You may have heard it called seller financing or seller carryback, but basically this is an option where you don't even have to go to the bank for a mortgage. The seller acts as the bank and you make payments directly to them. One little caveat is in most cases, seller must own the property outright in order to get this done. So we're going to learn more about it here coming up.
Okay, so now we scroll down.
Yep.
Okay. Must swallow. Okay. So let's talk about the benefits of owner carry financing. And there are, let me do this over. Let's talk about the benefits of owner carry financing. There are 4 main reasons why buyers and sellers choose to use owner carry financing. The first one is flexibility. So buyers who may not otherwise qualify for financing or who prefer to avoid the strict requirements of banks can still purchase property using owner carry financing. Also, we know that Freddie and Fannie have limits on the number of loans that they allow. I'm like struggling. Okay,
you're good.
Also, we know that Freddie Mac and Fannie Mae have limits on the number of loans that they allow one person to have, and seller financing is kind of a cool workaround for that. So generally, seller finance deals do not show up on a person's credit. Reason number 2 is that it's a faster process. Owner carry financing can be way quicker than obtaining a mortgage from a financial institution because it eliminates a lot of the typical lender requirements like appraisals and underwriting and all the other things that happen during a loan process. The third pro for doing owner carry financing is that all of the terms are negotiable. So buyers and sellers have way more flexibility to negotiate the terms of the loan. So the interest rate you can negotiate, the down payment amount, the repayment schedule is negotiable. So also, oh my God, so struggling. Let me do this again.
You're doing great.
The third reason people want to do owner carry financing is that everything is negotiable. So buyers and sellers have way more flexibility to negotiate the terms of the loan. So they can negotiate the interest rate and get maybe a below market interest rate. You can negotiate the down payment amount, and maybe you don't even have to put 10% down, or more or less, depending on what your goals are. And you can also negotiate the repayment schedule. So you can amortize the loan over a shorter or longer period. Also, closing costs are way lower with an owner carry deal because you don't have to pay for the appraisal, loan origination fees, or points. The fourth reason to do owner carry financing is taxes, and this is more for sellers. So why would a seller want to do this? Because they can potentially earn interest on the loan, and that provides additional income stream for them while also reducing their tax burden because they receive payments over time instead of getting one big lump sum. Ugh. Okay. All right. I don't know what I'm doing here. Here we go. You can just read the underlined line.
Yeah. Oh, thanks.
I wouldn't also.
Oh, perfect. Okay. So all that sounds great, but why wouldn't every seller owner? Okay. All that might sound great, but you might ask yourself, if it's so great, why wouldn't all sellers offer owner carry financing? Well, we're going to tell you why. There's at least 3 reasons. So number one, as we mentioned in our intro, one reason why an owner or a seller may not be willing to do or able to do owner carry financing is because they have a large mortgage left on their house. So if they've got a mortgage on their property, you really cannot convey a deed to someone without that being paid off completely. So that's one big reason. Number 2, the seller just really may want to cash out. So the seller has something that they want to do with their money, and they want to invest in other properties, or they really just want to be completely done with the deal. That would be another reason. Number 3, big reason why a seller might not want to do it is a common thing that investors do, which is basically tax deferment, or otherwise known as 1031 exchange with their money. So they want to take their money out of their property and then put it right back into another one without having to pay capital gains taxes on the amount of money that they make as, what's the word?
On the relinquished property.
I know, but
as profit?
Yeah, thank you. Yes. As profit on their relinquished property. So generally, these are the reasons for not wanting to do owner carry. Also, it's something that's not super common. So people really just might not be educated on it, and they might not have a realtor that really understands how it works. So again, that's why it's really just good to work with people who have experience in all these unique financing options.
Like us.
Okay. So here we go.
Shoot.
That's
Sorry.
okay. No, it's okay.
Okay, we're just gonna.
Yeah, we're just moving on.
Okay, I got your some. I'm so thirsty.
They have a 3 p.m. 3:30 works fine. Fantastic. Thanks. So,
Which one?
First one. It was the one we're waiting back for.
Okay. Alrighty. Okay. So let's talk about how an owner. Now let's talk about how owner carry financing actually works. And there are 7 important aspects to really understand how this all comes together. The first one is the purchase agreement. And this is the sales contract between the buyer and seller where you're negotiating the terms of the sale. So you're negotiating the purchase price, the interest rate, the repayment period, as well as any other important terms in the sale of the property. And both parties have to agree to these terms and document them in a legally binding purchase agreement.
Number 2, it's that down payment, that lump sum of money that most buyers are required to put down on a house when they are buying it. And this will help give you a good gauge for how much you're going to be taking a loan out for, obviously, and how much your monthly payments are going to be. So typically in typical purchase agreements with conventional financing, depending on the type of loan you're getting, you're putting down anywhere between 3 and 25% is the most common. But, again, as we've mentioned, what is really great about owner carry financing, all of these things are negotiable, and it really just varies from deal to deal. One thing to keep in mind is if an owner or a seller does have a mortgage on the house, that potentially you can pay, just the down payment could be just what they just what they owe on that mortgage payment, and then you can seller finance the rest of it. So down payment is the number 2 thing you have to consider.
The third consideration in owner carry financing is the promissory note. And this is something that the escrow team will create. So they put together a promissory note. This is a legal document that outlines the terms of the loan that you have already documented in your purchase agreement. This promissory note includes the purchase amount, the interest rate, the repayment schedule, and any other agreed upon terms.
Number 4 is deciding in the negotiating process whether you will be using a mortgage or a deed of trust in order to create security for the seller. So in most conventional loan situations, the seller receives a lump sum payment both from you and from the bank, and the bank holds a mortgage where if you default on the payments, then the bank can repossess the house and hopefully try and get their money back. So in this case, when you're using owner carry financing, the seller could choose to transfer the deed to you upon closing, and then basically hold a lien against you in the form of a mortgage. Same as a bank. If you were to default on those payments, they would be able to repossess that house from you via that mortgage. Second option is doing it via a deed of trust. And this is where the seller will remain on the deed, not you, until the entire thing is paid off in full, and then they will transfer the deed to your name once that balloon payment is made at the end of your term, or once the entire thing is paid off.
Yeah, so just quickly on this, each one has different advantages for the seller and buyer. So doing a mortgage might give the buyer more confidence because they are on the title, but it also gives the seller confidence that if the buyer doesn't pay, the seller can repossess the property. The deed of trust kind of gives the seller a little bit more power because they own the property until you pay it off as the buyer. So just different considerations. There are advantages and disadvantages to both for sellers and buyers, but both are used in various situations.
Yep. Oops.
All right, fifth consideration for owner carry financing is mortgage payments. So we just talked about the deeding process. Payments are, the buyer makes regular monthly payments directly to the seller or through a note collection company that has been agreed upon in that purchase contract. So this will be already identified, and the payments can either be principal and interest. You may negotiate just interest-only payments, and the payment schedule and duration of the loan can be specified in the promissory note as well.
Something to keep in mind with loan payments, though, is in conventional loans, in most cases, your taxes and your insurance are wrapped into your mortgage payment. So when you go owner carry, you need to keep in mind when budgeting that you will need to be paying your taxes and your insurance separately as well.
Great point.
All right, we are talking about the loan term now. So this is how long is the seller willing to be the bank for you? And again, this is another one that just varies from deal to deal. And this is what's so great about owner carry financing, because it is all negotiable. So I will say that in our experience, typical, most common is sellers are willing to foot the bill for a little while, but not a long while, right? Life is short. So we see most common balloon payments being collected after 3 to 5 years. And what we mean by that is when you're negotiating your term, you pick a date where the seller wants to collect all of their money, but that does not dictate what your payments actually are. That is how the loan is amortized. So your loan will be amortized over 30 years, so your payments of your loan will be divided over 30 years. And you will have to either at the end of that term pay it off entirely to them, or most commonly people will have created enough equity in their home or done some improvements, or be in a position maybe in their life where 3 years ago they weren't able to qualify for a conventional loan, but at this point now in time they've gotten their act together enough to be able to qualify for a loan, so they can refinance at the end of their term into a conventional loan.
Final consideration for owner carry financing is closing and title. So this is really about the transfer of ownership that happens at closing. And this is where that big old stack of papers gets signed. Ownership of the property is transferred to the buyer. And the seller, as we said before, the seller may remain on title until the loan is fully repaid if you choose to do a land sale contract or a deed of trust. So the escrow company will put together all the closing documents, have both buyer and seller sign, and off you go. You've got your new property. Is that it?
Yeah, that was it.
Okay.
Yep, we're good.
Do I want to do a sales pitch? If you are interested in finding, okay. So I'll just do this really fast. Okay. So we just gave you a lot to think about with owner financing. As we said, there are pros, there are cons, there are lots of considerations. And if you are considering finding and purchasing seller finance deals, we are your go-to gals if you want to make that happen in Central Oregon. Or we can refer you to people who can help you find deals anywhere in the country. So reach out to us, get on our list to receive all of these seller financing deals in Central Oregon before they come on the market or right when they come on the market. And we will be glad to help you with the entire process. So as I said, what am I doing now?
No, we're good. No, that was good. Let's see.
We have a closing,
Yeah,
right?
yeah. Okay. So, yep.
So thank you so much for joining us today for our owner carry financing, everything you need to know about creative financing using seller. Oh my God. Okay. So thank you all so much for joining us today to hear more about everything you need to know to use seller carry financing. As I said, I'm Suzanne Moore, realtor here in beautiful Sunny Bend, Oregon at Realty One Group Discovery.
And I'm Sarah Willis. And make sure before you get off this video to use that QR code so you know about every single owner carry financing deal that comes through this town. We'll talk to you later. Thanks for watching.
Bye, everyone. Sorry, you're gonna have a lot of it.
No, it's all right. It was a short video. It was easy. We're good. Cool.
Oh, we did it. We did it. We did it. Okay. I'm recording.